Yeah, hi, good afternoon, everyone. We're just waiting for people to join. Okay, thank you for joining the call for the quarterly update investor call for Kotak Private Credit Fund. You would have received the investor update for this quarter. As you're aware, we closed the fund a couple of quarters back. The fund size remains at 1,751 crores. We've drawn down a total of 1,430 crores till now. We have dry powder of about 320 crores left in the fund to invest. Of the 1,430 crores, 250 crores was drawn down payable on 17 Jan, which has come, and that will be invested in a new deal that I will speak about as we go along. As of today, it's 101,180 that is invested. Of the 1,180, 55 crores is reinvested. That is money that has come back, has been reinvested in deals. From here on, we expect the following drawdowns over the next few months. 250 crores, as I said, is already drawn down in January. In February, we expect to do two deals, but the drawdown will be about 200 crores. Currently, the January deal that we are doing is in industrials. It is a holding company transaction. It is with a large group. In February, we will do two transactions, both of which are IC approved. There is a renewables transaction and there is an infrastructure transaction. And we expect to draw down money for that in February sometime. I think over the next 2 weeks, we will start sending drawdown notices for the 200 crores. In March, there is one more infra deal that we intend to do, which is going to go to IC also very soon. And for which I think you will see drawdown of about 150 crores balance in March. This deal has not gone to IC yet, but we've already discussed with some of the IC members, and we feel good about doing this deal. If any of these deals do not actually happen, we have a pipeline of about total 8 transactions leading to 1,600 crores, which are at different stages, either at term sheet stages or one level beyond term sheet. But as of now, the way it seems that in January, we will close the holding company transaction for an industrial group. In February, we'll do one renewable and one infrastructure transaction. And in March, we will do one infrastructure transaction. That's the way we plan to close the investment in the fund. This quarter, we actually had two deals that went through IC and that actually have gone all the way to documentation. One was actually closed, which was GMR. I will talk about that. And the second one was a media asset where we actually got IC approval. We've created the documents, but it is stuck in government approvals right now. So if the government approvals come sometime this quarter, we may prefer to do that deal because it's a high IRR deal. It is an asset that is being bought out of bankruptcy, so it needs a certain process. That process has been going on for the last 3-4 months. And now we think it is moving towards closure. But given the uncertainty around it of government approval, we are not banking on that deal for now. But this quarter, we had two deals that went to IC. One was closed and one is pending. This is the live portfolio right now. Strides Pharma was a 50 crore OpCo transaction in this listed company. About half of it, or 26.8 crores of that, came back in September 2024, which we have distributed to investors. And outstanding is about 24.2 crores that will get paid out in March as per our agreement. This is being paid out early than the contracted payment schedule, but we've requested them to continue for some time, and they will pay us in March 2025. Ratan India was the second position in the fund. We started at 150 crores. As of 31st December, the balance in the fund is 11 crores. Balance, there is a lot of free cash that is being generated by the company, which has got swept and the debt has got repaid. This was the only position in the fund which had a monthly coupon, and hence you see that on a month-on-month basis, as this position is reducing, the level of coupon that is getting paid out every month is also reduced. Other than this, we don't have any other coupon paying position on a month basis. Everything else is either quarterly, once in 6 months, or annually. There is nothing that is monthly. Once this position gets paid out, there will be no monthly coupon payments, but there will be like quarterly payments and payments once a year. While the contracted date for exit for this is December 2025, we think this will actually get paid out by March 2025. It's running a lot more early than expected. There is only, as I said, there's only 11 crores left, so this should get paid out by March 25. That's our expectation. Hella business is doing very well. It's crossed 1,000 crores in EBITDA. It is, in our view, about within 5-6% range of our underwritten thesis on EBITDA. The business has actually utilized a lot more capital than we had envisaged. So the total debt in the company had gone up, but the company has just raised equity. I think it will be announced very soon. And the total net debt in the company now is below 3 times, which is very, very encouraging. And the company is also going to file for an IPO. We think sometime in the calendar year of 2025, the company will attempt going to the markets, of course, market window permitting. Tenchi and Karuna, these are two holding companies of the Strides Group. Tenchi was linked to the shares of Strides and Solara. We had pledge of shares of Strides and Solara. There has been a corporate action in the group, and because of which, a part of the business has been carved out into another entity called OneSource. That entity is expected to get listed, I think, on Friday. Yeah, tomorrow. And with this, there is a lot of unlocking of value that has happened in the group. The group has become significantly more valuable than it was even 2 years back when we entered. This listed entity is expected to be somewhere around $1.6 billion in value. That is the price at which some of the pre-IPO trades have happened on this asset. So Strides itself is $1 billion plus. OneSource will be a $1.6 billion asset. So the total group value will be in excess of $2.5 billion. And we have a lot of security on this asset. We make a lot of money on this. There is a lot of push to repay this position before time, but we've held it and we will see how this goes. But as such, the group is performing very well, and this asset for us is also performing very well. Resultex was an IT SaaS business that we had invested in. It had a holding and an operating company in Singapore and the opco in India. We had lent to the India entity. Again, the business continues to be growing very well. Business is expected to get about 220 crores of EBITDA for the financial year 2025, that is March 25. Business wants to take a little bit more debt. We have certain covenants around it, so we are of course seeing what is our position on how much they can actually take more debt for growth. But as such, the business is doing very well in India and in Singapore. Trishashna is the holding company for Satin Credit Care. Our position is not necessarily linked to Satin Credit Care, but it is linked to the cash flows of Trishashna Holdings, which is the holding company for the asset. And we get paid out from cash flows of that asset. On this asset, what we actually had an annual coupon. We got into this position in June 24. We had an agreement that we will actually take coupon once a year. But given all the noise around the microfinance sector, the promoter themselves have decided that instead of paying coupon once a year, they will pay it more regularly. And I think we will get coupon once a month or once in 2 months or as so. That is currently they're looking at the cash flows because there is enough free cash flow that is actually lying in the holdco, which they will use to pay down the interest portion of the debt. But we are very well covered. We are like more than 4 times covered on this position also. Also, the group has many other avenues like real estate, etc., to monetize and to pay us back if we need to. As of now, we are very comfortable, even though there is a lot of noise around the microfinance sector, but we are very comfortable with this asset. Going in June, we had already expected that the cycle will turn for microfinance and unsecured consumer lending. That's why out of 200 crores, we had only disbursed 150 right at the time of the entry, and we've kept it at that. GMR is, as all of you all know, this is the we had put in money in the holding company of the airport asset of GMR. We had pledge of shares of GMR. We gave 250 crores last quarter, end of last quarter, I would say. The money is actually very funnily, it has come back to us in January. We have not distributed that to investors. There was a large refi that happened in the group. They've been trying this for 4 years with different large pension fund and sovereign wealth funds. And that has actually happened in the month of January. They have paid us 6 months of interest as make whole, which was our agreement. So hence, if you see, the running IRR on the fund has actually gone up, and we are effectively running at a 18% IRR because of this, right? Without having utilized the money for a long time, we've actually got paid interest for 6 months. This money of 250 crores, we've actually not distributed back to investors. We intend to recycle it, and we already have a deal in mind with which we will recycle it. That is the second deal in February that we will do in infrastructure. So this is the position on the portfolio. This is the update on the fund. Generally, I think market remains the same. Market remains dislocated in terms of the number of potential borrowers that any potential lenders that any borrower looks at. Any borrower has options of at least 3 or 4 funds that 3 or 4 funds or NBFCs that they can potentially take money from. There are certain deals where more than 10 term sheets are actually given. So it continues to be a borrower's market where, generating anything more than 13-14% IRR is becoming difficult. And hence you would see that most of the other credit funds in the market actually have operated at that IRR level. We have been able to keep the level of IRR that we had promised to investors, and even beyond. We had actually promised around 15-16%. We are delivering 18. We think we will close somewhere in the range of 17% IRR for the whole fund. In addition to that, we think we will also generate the maximum value of return. So also not just IRR, but also the total amount of money that we will return will be the highest in the performing credit space. A lot of our deals, as you know, have some bit of redemption premium that is linked to the end. Our average coupon paying per annum right now is 13.5%. So we are paying a coupon of 13.5%, and we expect another 4.5% to get paid out as part of redemption period. This is already contracted, so this will come as the positions mature in the next 2 to 3 years. We expect that the interest rate cycle will turn, and the interest rates will go softer. Of course, it has not happened in a big way yet, but we expect that it will happen over this calendar year. But we'll all have to wait and watch where it actually goes. Capex is not, in our way, picking up in a big way because of interest rates being so high. So we expect that government will soften interest rates over time, and Capex will start also picking up, which will lead to more demand for our type of capital. So this is a little bit about the fund and an update on the portfolio and what we intend to do from here on till March. We expect that by March we will finish all the drawdowns and we will be fully invested. And then we will consider whether we are raising the next fund at that point in time. Anupam, you want to talk about the distribution?
Yeah.
For the December quarter and the next coming quarter?
Sure. Good afternoon, everyone. So for the quarter that went by from October to December, there were no scheduled repayments due, so we haven't distributed capital back. However, we have distributed income of 23.7 crores net of TDS. And right from the start till December quarter, in all, we have distributed 110 crores of capital and 86 crores of income. Going forward, for the January to March quarter, we anticipate distributing income of 37 crores, of which about 14 crores on the GMR transaction has been distributed already back. We have held back the capital for reinvestment, but the income on the GMR transaction has been distributed. We expect another 23 odd crores of income to be distributed. And in terms of capital,
this is 14 crores that we've distributed on 250 crores.
On 250 crores. Okay. Yes, that's it. And in terms of capital, we expect about 31 crores to be distributed in the coming quarter from Jan to March. So that's a summary of the distributions as of the last quarter and what is to be expected in the coming quarter.
While Anupam spoke about the total quantum that we are distributing, page 12 of the quarterly update gives a representation for two types of investors, let's say a 2 crore investor or 10 crore investor, what they can expect over the next 3 months in terms of distribution. The reason January, February have lumpy distributions, November also had a lumpy distribution, is because some of our deals, which are quarterly and annual coupon paying, are falling due on these dates. In fact, in January, we have 4 positions that are actually paying us coupons. In February, we have 2 positions that are paying us actually coupons, and that's why the interest that is being paid out in January and February is actually high. Yeah, that's about it from our side. Happy to answer any questions you all may have. And please feel free to type your question in the Q&A box if you have any, and we'll be able to see it and answer it. Yes, Mr. Cheda. So we currently have in the bank, you're right, 500 crores, 250 crores that has been drawn down, and 250 crores that has come back from GMR. The 250 crores that was drawn down, we are signing the agreement for that deal mostly by Monday or Tuesday, and that should get deployed next week itself. You can't time, drawdown and deployment of capital perfectly. So I think the money has been sitting with us for 1 week, but we have to run that drag at times. On GMR, we are sitting on the funds, and as I said, that we are already in discussions to redeploy that capital. It may be with the GMR group, it may be with somebody else, but we think that by February, even that will get redeployed. So that's why we've not distributed the capital back, because it's a hassle to give it back, call it back. We've kept it with us, and we will deploy it in February. Have we reduced the coupon rate for Trishashna as they are now paying? No, we've not. It is a voluntary decision by the borrower to come and pay to us more regularly versus annually, given all the noise around the sector, so that before we as lenders start making noise, they only come forward and done it. And they were sitting on a lot of free cash. They generate almost 60 to 70 crores of free cash at the holding company every year. And they had certain other obligations which they finished by December. So they were sitting on free cash and they offered to pay us back. There was a request to reduce the coupon rate because they are paying back earlier. But as of now, we have said no, that we are happy to take back the interest. It reduces their burden, but we've not reduced the rate as of now. The last drawdown could be March and nothing beyond that. Yes, Mr. Ruchit, that's correct. There is no more drawdown after that. That's what we expect. So, Mr. Mehra, you have two questions. I'll take the second question first. Do you see higher utilization of principal on weighted average basis? Yes. This is exactly what I was trying to say, that when we see higher utilization of principal on a weighted average basis, the total value of interest that we pay back to you is actually highest amongst the industry right now. So what we as in the fund industry call as total money multiple or money on invested capital, MOIC, that benchmark is actually highest for us versus the rest of the industry. Generally, we would be at least 20 to 30% higher than anybody else on the weighted average use of principal. We are seeing enough use of that at a good rate, and that's why we are doing this. If we are seeing that we were getting only 12, 13, 14% return, we would actually return money faster to you. But we are actually seeing higher rate of return even now. And that's to some extent, that's the reason why our drawdown has been slower. We've been very picky on getting the right security, getting the right control in every asset, and getting the right price. That's why our drawdown has been slower. But the total utilization of funds, actually, for the quantum of time the money stays with us and earns interest, is actually highest in the industry right now. Your second question was, could you please elaborate again on higher IRR versus higher absolute return? Okay, so let me use two terms, and I've been trying to get our ops to use these terms in your SOA. So we'll see where it goes. But there is a concept of cash yield and there is a concept of total IRR. Total IRR is what you make on an investment. Cash yield is what gets paid out to you every year, right? The difference between the cash yield and the total IRR is what gets paid out as redemption premium. It is something that you have earned, it accrues to you, but it gets paid out at the end of the investment. Each individual investment has a different maturity date, but gets paid out with the end of the investment. The cash yield running right now is 13.5%, which means on, let's say, 10 crores that you would have invested, you are getting 1.35 crores back in your bank account, gross of TDS, 1.35 back to you every year. 4.5 on that, 0.45 crores on that will get paid out, accumulated for, let's say, 3 years at the end of the period. So that is the difference between cash yield and total return. Total return on the fund today is 18%. Again, to repeat, of that, 13.5% is getting paid out in cash. Balance will come on redemption. Can you please indicate last year drawdown of fare which will have to be paid? I'm traveling abroad from. Yes, Mr. Joglekar, we can take this offline. We don't have a date, sir, as of now, but I understand the point that you've made, and if we can communicate early in the first week of Feb, we'll try to. But as of now, I don't have a exact date in Feb when the drawdown will be done. We do the drawdown only when we have full conviction on the deal, and we think that the signing is maybe 10 days away or 15 days away. We don't draw down before that. So as we get closer to that, we will do the drawdown. Mr. Pacha, the NAV of increase of 4% last year from October to December at 2 months. Yeah. So this is Mr. Pacha. This is a specific question to your investment. There is a minor difference between all the investors because of different clauses, etc. Some capital has gone back. Some you've come in earlier. You've come in late. So there is a small minor difference between everybody. But the way you are looking at every quarter, we are effectively generating 3.5 to 4% additional return. Some bit of it gets paid out. Some bit of it gets rolled over to next month. Okay, let me explain what I mean. If you see for the month of October, November, December, only in the month of November there is a high payout. But in January, February, there is a higher payout. So on 31st December, what happens is that accrual comes as part of NAV. Then it gets paid out in January and February and starts getting equalized. So watching it quarter on quarter will actually create distortions. The way to look at it is you are getting paid 13.5% every year as coupon, and total return you will make is 18%. And by the way, these numbers are tested, these numbers are vetted, and then we've given them to you. When we receive money back or when we've drawn down capital but we've not deployed that, does it go into any liquid product or not earning income? Our standard instruction, our standing instruction to our ops team is that whatever money comes has to be anything above, I think, 10 crores or something. Yeah, I think anything about 10 crores actually goes to a liquid fund immediately, right? So all that money that we have right now is sitting in liquid funds. We withdraw it one day before we are actually going to disburse it, and it actually makes income till the date of actual deployment, and that gets paid out as income to you. Whatever income that has been made on the liquid investment, that also gets paid out as income. It's part of the total IR. Yes, Mr. Joglekar, either your RM or our fund team can explain that to you. Accrued income is accrued every day on the fund, and it gets taxed every year. And to that extent, TDS is also deducted every year and paid on your behalf to the government. It's not the case that superior MOIC is reflecting superior. If you compare our MOIC to the other funds and comparing others. Mr. Doshi, there are, yeah, in a way, yes, what you are saying is right, but superior MOIC and IRR are two different concepts. MOIC is, as I had mentioned earlier, MOIC also takes into account what is the average time the capital has been used by the borrower or by the fund, right? That's the way to look at it. For example, in GMR, our IRR is 50% because the money has been used for only 2 months, but we've got paid for 6 months. So while we've got paid for 6 months, IRR looks very high, but the MOIC is extremely low, right? And that's the reason why the average IRR has gone up. But our MOIC even today is close to 1.5x, which means for every rupee you've invested, you will get back 1.5 rupees, right? Which is actually extremely high. On an average, funds make somewhere between 1.25 to 1.35, bordering to, let's say, maximum 1.4x. And you can test this with other funds also in the market. We are actually generating 1.5x, which is significantly higher than all the other funds. Our MOIC is actually the highest. One. Second, even on an IRR basis, this fund is generating 18% gross return on a secured basis. So if we don't do any real estate investment, we don't do any venture debt, we don't do any distress investment. Funds that are doing that are, of course, riskier and generate higher return. But on a complete corporate secured basis, if you compare the funds that operate in our space, right, they generate somewhere between 13 to 15%. We're actually generating 18%, which is significantly higher. Yeah, Mr. Noops, nothing went wrong with the GMR team. See, GMR is a very large group. I have worked with them when I was at KKR also. I had done a position with them even then. They have a total debt of about 6,000 crores at the holding company. They have been trying to refi that with one investor for the last 4 years. Okay, even when I was at KKR, they were trying it. Even when I joined Kotak, they were trying it. We kept discussing for quite some time, and that was not happening, right? And so we did this small position with them of 250 crores. We had shares of GMR Airports. from their perspective, and even from our perspective, it's a testament of the fact that look, some large investor has also believed in them and taken a bet of 6,000. Unfortunately, that investor wanted the whole capital holding company stack to be cleaned up, and hence all investors were taken out, not us. There are about 5 to 7 investors on the street that had given money to GMR at the holding company. Some people had given money 6 months back. Some people had given money 3 months back. We had given money 2 months back. Everybody has been taken out, not just us. Everybody on the street has been taken out by one investor who has done a 6,000 crore. So there's nothing wrong with them, right? While going in, also they had told us that we are discussing, but it is not sure, right? I think to all credit to the GMR group, they actually paid us for 6 months, right? And we are seeing whether we can recycle it with them or with other people in the industry itself. We are reasonably confident that this 250 crores that has come back, we will deploy it in February. Yeah, Mr. Noops, can I suggest this is a specific question on your specific investment. Maybe we can take it offline either to your RM or to our ops team or investment team separately. Happy to answer that. Conceptually, doesn't matter which close you have come into, but what happens is you get equated. You are an equal participant in, or you are a proportionate participant in all the deals. Some of the investors were drawn down much more earlier. Late investors who came in were drawn down less. Now everybody is equal. Everybody is drawn down at 80%, which means if you've committed 10 crores, 8 crores has been drawn down from every investor as of today. So, barring minor differences, but everybody is at 80% drawdown. Everybody has equal share in the proportionate equal share in the fund. You have equal exposure to all the deals that we've done, whether it is a 15% deal, whether it's an 18% deal, whether it's a 20% deal, whether it's a 16% deal. You have equal exposure to the whole diversified portfolio that you hold. Okay. Ms. Shah, I think again I'll have to look at your SOA specifically, but it seems that in this quarter's SOA maybe they've put. So look, if you look at this page, let me explain it in context of some numbers. Yeah, if you look at these two numbers, 26.8 and 139, these are two numbers which is basically capital return from two positions in the fund that were distributed back to you. We have the ability to call that capital back. It's something that we are discussing whether we should or should not, because it creates disturbance in your cash flow planning. The reason I think the ops team would have put it in there was because we are seeing a lot of new opportunities at good return. So we were thinking whether we'll call it back or not. But if we do that, we will. Right now we've not decided whether we'll actually do that or not. We understand it creates. For some investors, it could create some confusion on cash flow planning. So there is a good chance we may not actually do it. Yes, Mr. Joglegar, the 4.5% itself, that's what I was referring to. The 4.5% accrues on the investment every day. The 4.5% that gets paid out as redemption at the end actually accrues on the investment every day. And hence it accrues in your account every day. And that effectively gets taxed at the end of the year, and the TDS is also paid on it, and it accrues. We are required to do that as a fund, as part of accounting, and as per tax law, we are supposed to accrue it and pay it to you when it comes. But the tax on that is deducted right now. Higher risk, Mr. Doshi, higher risk adjusted return for others. But from our perspective, we've not done real estate, we've not done venture debt, we've not done any distressed assets. We've not touched any of these three segments. Most of y'all, when you would have met somebody from our side, we would have told this to you at the time of investment that we will not touch these three categories. From our perspective, these are higher three risk categories. We've not touched any of them. We still retain only corporate debt, holding company or operating company with larger assets. That's what we have maintained. In spite of that, the return is 18%. In few deals, we have shares as collateral. Do decent corrections have any impact? On all the positions we have that they have shares as collateral, we are very well secured. We are secured in excess of 3 times right now on all our positions. So we are not actually worried, because you should remember that most of those positions were also older. The stocks have actually run up much more, and then they have corrected. So the correction is actually not that much. So no tax when actually distributed. Yeah, Mr. Joglegar, happy to take some of these questions online. You seem to have many more questions on this tax impact, but happy to take them offline. This is required as per tax law for us to actually accrue that income every day and every year, and also deduct tax on that. Great. It seems to be the end of questions for now. Thank you very much for your time today, and thank you very much for your faith in the fund. I hope everyone has a good year, and look forward to speaking to you next quarter. Thank you.
Thank you, everyone. Thank you.